Hey, everybody, I'm Toby Smith. I'm filling in for David Asman tonight. Look, investors took a beating in August. There's no messing around here. All the major indexes were down 4 to 6%. So the question on everyone's mind is, hey, is September going to get any better? That's what we're going to do tonight. We're going to break it down for you right now. We have some of the best minds of the world in investing to give us some answers here. With us, Mark Matson, the CEO of Matson Money. Rodney Johnson's the president of HS Dent, co-author of the upcoming book, The Great Crash Ahead. I guess we know where he stands. And Peter Schiff, CEO of the brokerage firm Euro Pacific Capital. And he's the author of the little book of Bull Moves. All right, gentlemen, let's get to it. Here's the deal. If you boil this topic down to the core, right, even in weak economic data, it can be positive for stocks if investors basically are already braced for disaster. I mean, with so many bears out there, it took us all day to find one bull. Isn't the bad news priced in, guys? Come on, Mr. Matson, give me a little help here, Mark.
Hey, Tobin, I think I was a little bit mischaracterized. Although I am definitely bearish on Obamonomics here, I'm always a long-term bull. Last week was a perfect example. The market had a 17% slide off. And imagine this, at the beginning of the week, if you knew there was going to be a major hurricane, a major earthquake, Bernanke wasn't going to come out with QE3, who would have guessed that it would have gone up 8%? And the reality is, anyone that tells you they can predict where the market's going in the next 10 days or 20 days or even a month, they're lying. The market is random and unpredictable. You have to own it long term. Equity premiums only show up over 5, 10, 15, 20 years.
All right.
Stop trying to time it in the short term.
Hey, Peter, look at you. You made a living telling everybody what's going to happen. So what's going to happen here? I mean, I'm not trying to ask. Isn't this bad news?
Well, first of all, the Bears have been getting beaten up for 11 years now. So, it's a long wait for things to turn around. 11 years ago, the Dow was worth 43 ounces of gold. Now it's not even worth 7. And, if we get quantitative easing, that's bad for the economy, and it's bad for the real value of stocks. Sure, if we print enough money, prices will go up for stocks, but in real terms, in terms of gold, the value of U.S. stocks is going to continue to fall. And certainly when measured in other currencies like the Swiss franc, U.S. stocks have got nowhere to go but down. And investors have to understand that they need protection from inflation, from the Fed and from Obama. They're not going to get it in U.S. stocks. They're certainly not going to get it in treasuries.
All right, Peter, so we're off from the March 2000, we're up from March 2009 low. 75%, 65%.
Not in terms of gold. We made a new low.
But I don't spend money in gold.
Priced in gold.
I don't buy my groceries in gold. I buy my groceries with dollars. Come on, let's stay with it. Let's stay with it. All right, now look at Rodney. Yeah, Rodney, you're also a guy who, I know you have this book that the world's coming to an end and we have a crash. Isn't all this bad news priced in?
No, absolutely not. People keep looking and they want things to be positive. There's a bent to our minds to be positive because that's where our portfolios are. People are hoping that things go up, and that hope and change, kind of knows how that got in there. People are hoping that something's going to come out that's going to make it very positive and they're going to be able to make money in the markets. And unfortunately, they're wrong. We're looking at the next several years. We don't have anything but a lot of deleveraging and difficult times to deal with as we go through the contraction of the credit bubble that we had. And so, unfortunately, it's not a pretty picture in the equity markets for quite some time.
All right, but look, guys, you look at the 800-pound gorillas in the room, right? We have the state of the Eurozone and its banks. That's one issue. Yeah. We have the state of United States and our economy. And then maybe the third one here is we have this, government disaster in Washington going on. But that bad news, we sort of went through it. We had these markets go up and up and down and up and down and up and down. Peter, if someone's going to be investing here, their 401k, their IRA, et cetera, and in September, this is sort of the crunch time, right? Because, you could make a decision. Maybe I just want to go to cash and, put my thumb in my mouth and buy gold. Maybe I want to buy something. Why wouldn't I want to buy a company like IBM that's growing its earnings, 15% a year and is selling for 10 times its earnings? I mean, there are a lot of cheap stocks.
If you've got a longer time horizon, I'd rather buy IBM than own U.S. dollars. But those aren't the only two choices in the world. I'd much rather buy stocks outside the U.S. that have better valuations, higher dividend yields, that don't have Obama to deal with, that don't have our Congress, that don't have Ben Bernanke. People have got to protect themselves from the real threats. which is massive money printing, inflation, and a U.S. economy that is never going to recover until the government does the exact opposite of what it's been doing. We need higher interest rates. We need less government. We need fewer regulations.
All right.
Unfortunately, we're not getting that. And you know, Tobin, you actually can buy groceries with gold. I own a bank offshore. It's Euro Pacific Bank Limited, and we're about to launch the world's first ever gold-backed MasterCard. So my clients can take their MasterCard into the supermarket and buy groceries with gold.
Well, now, you know, see, I like it. You know, you've been talking about that for about 10 years, Peter, so I like that. So, well, what would you buy now here? I mean, what do you know, you're a European guy. European banks, everything else is in the tank. You know, Japan is going nowhere.
Europe is no, you know, look, it's no picnic over there either, but, you know, we are investing in a lot of countries that aren't in Europe. You know, there's a whole world out there besides the United States and Europe. And within Europe, look at Scandinavia. Look at what's going on in Norway and Sweden. And look at Switzerland. So it's not all about the Eurozone. And look outside. Look at Australia. Just look at the north of Canada. There's a lot of opportunities up there. New Zealand. Look at Singapore. Look at Hong Kong. There are plenty of places to invest.
I get it now. Hang on, Mark. Tell me what you're buying. What would I be buying with cash in September before Peter takes all the oxygen out of the room here?
Tobin, we did an analysis of over 10,000 portfolios, and we found today is 70% fixed in cash, only 30% in equities. If we went back 5 years ago, we'd see the exact opposite. 80% equities, only 20% in cash and fixed income. Largely from these predictions, from demographics, that the Dow was going to go to 40,000 by 1995. Obviously didn't happen. And then the reverse, everyone's predicting Armageddon because it's fashionable. The reality is, yes, you should build a globally diversified portfolio, but don't bet that U.S. is going to get tanked and only Europe is going to do well, or China, or Asia. You have to have both. We have over 45 different countries specializing in microcap stocks and high book to market value stocks. That's where the premiums are going forward. Don't get caught time to time it.
All right, Rodney, let me read something.
And I'm going to be interested in taking some gold and trying to buy some stuff at Walmart. I'm going to see how that goes.
Don't get Schiff started on this.
Well, you can do it with my credit card.
I know his credit card. God, I paying Peter Schiff every time I use my credit card. Man, that would drive me nuts. All right, look, I'm going to read this one from Goldman Sachs out today. They said, and I quote, sort of, here we go again, solving a debt problem with more debt, which has not solved the underlying problem. Can the U.S. continue to depreciate the world's base currency? Rodney, can the U.S. continue to depreciate the world's base currency?
Well, they could, but they, of course, ruin everything, and they're not going to do it. I very much disagree with Schiff on where we're headed here, because we think you're going to see a flock to the United States. We have done everything we can to devalue the dollar. We've worked on it pretty well. You can buy.
Don't hate the player, just hate the game.
I'll be a hater on the NLRB. Look, I think there's nothing more un-American than shutting down a manufacturing plant for opening a manufacturing plant in a state that doesn't necessarily go with union jobs. I mean, what's more un-American than shutting down jobs just because you disagree with their non-union policies? I mean, I think that's really un-American there, and I think it's a brilliant, not only political move by Nikki Haley, but it's also a way for her to kind of stay clear on the ethics side of it by having someone on the Republican side step down and protest.
Peter, quickly, you have anything to add to this?
Yeah, well, look, it's no coincidence that the industries dominated by unions are disappearing. They're destroying their companies, and they are very un-American. They're anti-private property, anti-capitalism, free markets. I agree that the unions have been a disaster for this country, particularly for the workers.
Well said, Senator. All right, let's go. All right. A new ban went into effect today in Michigan. More than 500 bars. There's more than 500 bars in Michigan. I've been to all of them. Decided to ban any and all Michigan lawmakers from entering the premises. Thanks to a ban on smoking that left more than a few patrons unhappy. All right. Even those who don't smoke were unhappy with this thing, all right?
All these regulars are smokers. They enjoy coming in, watching the games, and drinking their beer and smoking while they're here. So I'm sure it's going to hurt a lot of businesses.
All right, Katie. Banning lawmakers going to a bar. Is that a good idea?
Hey, you know, it's costing businesses $200 million, and I say these lawmakers are getting a taste of their own medicine, and it's bipartisan, so why not? It's their property. Businesses can serve who they wish and when they wish, so more power to them.
But, Peter, you know, in New York, they ended smoking, and it hurt for like the first year or so. But I happen to know a few people in the bar business here in New York, and their businesses come back. You know, why get so steamy on this stuff?
Yeah, you know, I really like this concept. I just like to expand it. Let's ban politicians from the entire country.
I love it.
Now we're on to something.
Al, are you now going to jump on the bandwagon, the ban politicians? We ban. Some guys want to ban contributions, right?
I think we got to get the politicians in as many bars as we can so they could sit down, meet the people, and maybe have a few drinks, and maybe like a little inebriation would give them some better ideas. I'm down with this banning smoking thing, though. You know, I used to smoke. It was one of the hardest things I ever do to quit. And the reason why I'm such a Nazi about smokers is because I cannot walk down a sidewalk or a street without seeing somebody flicking their butts all over. Why do smokers think the world is their personal ashtray? Clean it up out there, and maybe people will be more sympathetic to your plight.
Way to go, Al. I'm with you on that, too, by the way. All right, look at here.
Fair enough.
Online analysts say daily deal sites are losing quite a bit of their luster. Groupon visits right now, for example, they were down like 50% last week from the second week in June. That would obviously peaked this year. Peter, should investors steer clear of this social commerce bubble like Groupon?
Well, I wouldn't touch these stuff. I mean, Groupon's not even public yet, but
yeah, but they're going to do an IPO,
I think this
right?
is the new fad.
Yeah.
And the valuations are nosebleed. I wouldn't touch any of these social media stocks. You know, give them a few years and see how it shakes out, but I wouldn't go near them.
Well, Katie, one of the things on these sites is that, you know, all over the world, these guys are trying to compete. Everybody's cloned them. There's like 5,000 copycats of everything going on.
Right, so I guess let the best deal win. But, I mean, you have to look at the timing of this, too. I think that it's summertime, and a lot of the deals you get on a Living Social or Groupon, you have to use within a couple days, maybe the next month or two. And summertime is when you're not necessarily in the city where you're getting the deals. So I think that maybe you shouldn't be investing in it right away because they are brand new. But I think that maybe once people get back in school, back in college, back in the workplace after a summer break, that we'll see a pickup in that again. I hope so, because I love Living Social. I think they give you a lot of really good deals.
They're going to want to get an endorsement from you. Hey, Al, you know, you obviously look like a man who's at the cutting edge of all fashion and everything else. So are you buying these things from the Living Social and Groupon? I mean, you get little massages and facials and stuff for half off?
You know what? My wife is buying them, and I keep telling her, you know what this is? This is junk mail. Just because they don't put it, just because they put it online doesn't mean it's not junk mail. You know, the secret behind all of these things is that the companies that are actually advertising for the Groupons are losing money. All these promotions that people, restaurants and such are doing, they're losing money. So, you know, it's like everything else that loses money on the internet. Eventually you got to ask the question, Toby, how long can they keep losing money?
I'm with you. You know, I like the sites where you buy the existing coupons that have already been sold for like 50% lower. That one I like. All right, guys, great to have you.
Make it up on volume.
All right, exactly.